Hi there, welcome back. So the other day I got interviewed about estate taxes by a journalist, and I thought I would share some of it with you because a lot of people have these same questions, so here you go. First question I received from the journalist was, what are the limits that currently apply to estate taxes? And what are some of the strategies for managing the limits on gifting? All right, so under our current tax law, that's always the caveat, right? Under current tax law, your exemption amount from estate tax is $5.43 million per person. So that's over $10 million for married couples. Wow. It wasn't that long ago that it was $600,000. Can you remember? So it's changed a lot. And because it's changed a lot, it certainly could change again. But today, you can leave $5.43 million, so almost $5.5 million to anybody you want when you die, if you have that much money, and there's no tax, no estate tax. Now, very important to remember that we have what's called the transfer tax system that includes the estate tax and the gift tax, and then completely separate from that is the income tax. And if you want one more, Social Security tax. Those are the three big ones that we collect that total up to our current U.S. Revenue of about $3.5 trillion. Wow. Did I say wow before? Wow. Okay. So the estate tax. So you can leave 5.4 to anybody you want, and there's no estate tax due. Inheritance tax, death tax, same thing. So where's the planning? Where's the work? Not much if you have less than that. And if you're married and you want to leave everything you have to your spouse, and then they're going to leave money after they're gone, and you want him complete unfettered access to that money, you can leave everything you have to your spouse. And now what's really interesting about the current tax law is this used to require a lot of work to preserve that exemption amount that each person had. It would go away at death if you didn't plan it correctly. But now they've made it portable. So when you pass, it becomes, not only does your spouse inherit the money you've left them, but they also inherit that exemption amount. How cool is that? Now, you've got to die to make it happen, so that's not cool. But 5.4 plus 5.4, now we're almost to $11 million that they then, at their death, can leave to whomever they choose, and there's no estate tax. So this has really changed the whole estate planning landscape and made it really, I would say, a lot simpler, especially for what we call our regular folks. Now, the ultra wealthy, the billionaires, for those, that extreme minority, they still have a lot of planning to do. But the point is, for most people, not much estate planning. Now, kind of as a related question, and it has to do with this $14,000 annual exclusion, or gift limit is sometimes called. Well, a couple things about that. Number one, it used to be $10,000 and it's now $14,000 because the way the Treasury rules work, and it's not really the IRS, I mean, they're the enforcer, but the Treasury Department, they're the ones with the rules. So between the Treasury Department and IRS, the rule is it's gone from $10,000 to $14,000 for inflation. So that's not really a limit on how much you can give. And I get this question more often than you would think. You can give as much as you want to anybody. There's nobody that tell you you can't. And the only question is whether there's a tax consequence. Well, not only can you leave $5.43 million to anybody you want as an exemption from estate taxes, guess what? You can also give it to them during your lifetime, $5.43 million, the same number, and there's no gift tax. So where's the $14,000 limit come in? I mean, think about it. You got $3 million, you say, I don't need this, and you give it to your brother or son or cousin, whoever. There's no gift or estate tax. You file the form, it's called a 709, telling the IRS, hey, I'm giving this money to my whomever, and there is no tax. So where's the $14,000 come in? Well, the $14,000 is a dollar amount that assumes that you're either wanting to hold on to your exemption amount, that 5.43, for some future purpose, or you've already used it up with gifts you've made during your lifetime. So let's just say you've got $10 million and you've given $5.43 million of it to your brother. And you still have a significant estate, and you're like, I want to give more away. Any more you give is going to be subject to gift taxes, which can get pretty high, 40% or so. But there's $14,000 each year that you can give to anybody you want, as many people as you want, and there's no gift tax. You still file the 709, you still have reporting requirements, but if you do that, you can give, for example, you could give $14,000 to 10 people every year, move $140,000 out of your estate, and there's no gift tax. So that's where the gift limit comes into play. Now, what's interesting is when we had a $600,000 exemption, which is a little ways back, but a lot of people still remember that, then it went to $1 million, and then it kind of crept up from there. But when you have a $600,000 exemption amount, well, a 10 or 12 or 14,000 annual exclusion is a lot more relevant. Today, with 5.43 that you can give away during your lifetime, that'll pretty much cover it. And as you might already have guessed or thought about, you can also make joint gifts with your spouse. They too have that 5.4. So if you've got an extra 10 million laying around, a married couple can give that to whomever they want, and there's no gift or estate tax. So it's very interesting. Now, the other question I received was about credit shelter trusts. And all of what I just said pretty much makes credit shelter trusts not as common. I'm not going to say moot, but definitely not used as much. A credit shelter trust was originally designed and used often back when we had these lower estate tax exemptions to preserve the credit, that exemption amount, back, let's say when it was $1 million, to preserve that $1 million exemption so that the spouse that has died, they could transfer money to the next generation, use their exemption, but still let the spouse have income off of those assets. So in other words, if they just left everything to the spouse, that $1 million exemption it goes away. But by using this special type of trust, you hold onto the exemption, the spouse gets to have income off of the trust, and then basically by doing the credit shelter trust, along with what we've done for the other spouse, you basically could shield $2 million from estate taxes back when we had a $1 million exemption per person. Well, when one person has 5.4, all that's extra work for most people and really unnecessary. You just give the money and your exemption to your spouse, and they've got plenty of money and they've got plenty of exemption to leave money to the next generation without an estate tax. So that's kind of made the exemption, the credit shelter trust, not that big of a deal. And last but not least is, do irrevocable trusts save on taxes? Income taxes? No, not really. Gift and estate? Yes, maybe if done correctly, and all the things I just talked about. And some people use irrevocable trusts to hold life insurance, where they have that asset, that life insurance, outside of their estate. So there's a lot of things you can do with it, but it does not save you income taxes. Hear me, please. It's really interesting. If you don't distribute money that's held in an irrevocable trust, if you don't distribute the earnings, the trust pays its own taxes because it's its own person, and you could have a 40% tax bracket just on $12,000 of taxable income for a trust, whereas a married couple would have to have $465,000 to have the same tax bracket. Crazy, huh? So, trusts, estate planning, well worth the time working with an attorney. Get some guidance, and if you do that, you'll plan stronger.